The AI narrative is the biggest story in tech right now. Every major company on the planet is racing to control it. And sitting right in the middle of that race is a crypto project by the name of Bittensor. It's down roughly 65% from its all-time high, but under the surface, the fundamentals tell a different story. So today we're going to break it all down. Bittensor's tokenomics. What is actually being built right now, where the macro stands today, and 3 realistic price scenarios for 2026 based on market cap math. But first, hit that subscribe button, guys, if you haven't already. Now, let's get into Bittensor. This is not a financial advice, always do your own research. Right now, TAO is trading at approximately $270, ranking around 30th in the overall crypto market with capitalization of roughly $3 billion. That's a long way from its all-time high of around $760 a piece, reached in April 2024. We're talking about a 65% drawdown. So why has it been this painful? A few reasons. The broader crypto market went into a correction starting in late 2025, with Bitcoin falling from its highs above $126,000 and dragging everything with it. TAO, as a smaller asset, got hit much harder. But here's what's interesting. The price, guys, doesn't actually match what's happening on the ground. Now, if you step back from the chart and look at what Bittensor actually is, the picture gets a lot more compelling. The project is essentially trying to build a decentralized marketplace for artificial intelligence, where AI models compete to provide value, and the best ones get rewarded in TAO. Think of it like an app store for AI, but one that nobody controls. And in 2025, 2 things happened that changed the game. First, the dTAO upgrade launched in February 2025. This completely redesigned how the network allocates rewards. Before dTAO, a small group of validators controlled most of the emissions because every block produced 1 TAO, or 7,200 TAO per day, which was distributed to subnets based on weightings assigned by root validators. After dTAO, emissions are no longer assigned through validator weightings. Instead, TAO emissions now flow through a market-driven system using subnet tokens, also known as alpha tokens, and rewards flow based on performance. So, what was the result then? The network exploded from 32 active subnets to over 130 in just months. That's a factor of over 4. These subnets, like Shoots AI for instance, are generating real revenue, offering compute services at up to 90% cheaper than AWS. Second, TAO had its first halving in December 2025, cutting daily emissions from 7,200 tokens a day to 3,600. Just like Bitcoin, less new supply enters the market while demand keeps building. On top of that, institutional money is starting to show up. Grayscale filed for a Bittensor Trust with the SEC. A company called xTAO became the largest corporate holder of TAO. Deutsche Digital Assets launched a staked TAO ETP on the SIX Swiss exchange too. Now let's look at the chart. Bittensor peaked in the last AI mania around $750. That was 1,500% gains in less than 6 months. After that, the price quickly dropped 80% to $166. Then came another massive bounce of about 300% again, but it failed to score a new all-time high, and since then, the price of the token dropped over 60%. Currently, TAO is trading at $270 and has made 100% gains since it bounced off the crucial support. This was also reflected by the RSI. When the indicator hits this level on the weekly time frame, TAO tends to make a reversal. However, the price has now hit the 200-day moving average and is slightly rejecting from that level, which could dump us back to the previous support at $150. This support level has been tested many times, but in the grim scenario, we can break it and go even lower. Then the next big support is at $80 to $100. This would be a drop of 60 to 70%. But here's the honest context. We are not in a bull market right now. Bitcoin is currently trading below its 200-day moving average, and that's a significant bearish signal. Historically, when BTC is below this level, altcoins like TAO tend to bleed or drift sideways and not rally. The 200-day moving average for the number one crypto currently sits around $93,500, and as you know, the price is well below that. Until Bitcoin reclaims and holds above that level, the path of least resistance for TAO remains uncertain. That's not a reason to panic, however, but it's a reason to be more thoughtful about when and how you enter. To understand where TAO is headed, we need to understand the macro environment. And right now, two major forces are pulling in opposite directions. The positive signal, the PMI. It came in at 52.4 in February 2026, down slightly from the January level by 0.2, but still above the critical 50 level, meaning the economy is expanding, at least in theory. Historically, a PMI consistently above 50 is a green light for risk assets like Bitcoin and altcoins. Another factor is the potential quantitative easing. In plain English, that's the Fed printing money like mad. But there is a complication here, and a huge one at that. The Iran war. Stay with me here for a moment and it will make sense, I promise. On February 28th, 2026, joint US-Israeli strikes on Iran began a conflict that has sent shockwaves through the global energy markets. The Strait of Hormuz, through which roughly 20% of the world's oil supply travels, has been effectively disrupted. Crude oil surged past $800 a barrel, and gas prices have jumped sharply for American consumers and actually worldwide. Well, here's why this matters for crypto and specifically for the chance of quantitative easing. Oil price spikes directly feed into inflation. Inflation was already running at 2.4% in January, which is above the Fed's 2% target. A sustained oil shock could push that back toward 3% or higher. And when inflation rises, the Federal Reserve cannot cut aggressively, let alone launch a full QE program. Higher inflation means tighter financial conditions, and that is not an environment where risk assets like crypto tend to rally hard. Now let's talk numbers. For this analysis, we use the total crypto market cap and realistic dominance scenarios. As a reminder, at its peak, TAO's market dominance reached approximately 0.25% of total crypto. Now, here are the two major directions that we can take, the bull and the bear way. First, let's look at the bullish scenario. It assumes that when PMI makes higher highs, Bitcoin breaks above the 200-day moving average. On the geopolitical front, the Iran conflict resolves quickly, oil prices stabilize, inflation cools back toward 2%, and the Fed starts printing. It's fair to assume that in this scenario, the total crypto market cap reaches $9 trillion. Now, here are my two hypotheses here. Hypothesis A states that these favorable conditions will help TAO reclaim the 0.25% dominance, matching its previous peak. The market cap will reach $22.5 billion, and the price for a single token will approximately go to $2,100. And if you thought that was mouthwatering, here's the bullish hypothesis on steroids. Hypothesis B assumes that TAO reaches 0.5% dominance, and that's double the ATH dominance, reflecting the AI narrative premium, of course. Market cap reaches about $45 billion and TAO trades for $4,200 a piece. That's about it for the bulls, and if you don't want to hedge against a potential market downturn, you might as well stop the video right now. Because the second scenario is bearish. If the Iran conflict persists, oil stays elevated, inflation reaccelerates, and the Fed keeps rates high, the geopolitical and economic uncertainty would be so high that I don't expect fresh liquidity to enter the crypto market. Total crypto market cap shrinks back toward $1.5 trillion or lower. TAO naturally revisits its deep support levels around $80 to $100. That would be another 60 to 70% from current prices today. Just so you guys know and don't say I didn't warn you. So, how do I personally approach this? I'm actually not buying TAO right now. And here are the certain steps on the market I'm waiting for before pulling the trigger. Step 1. Bitcoin needs to reclaim and hold above its 200-day moving average. That's the first confirmation. Step 2. The PMI needs to stay above 50 and make higher highs. We're there now, but I want to see confirmation that it holds as the Iran situation develops. Step 3, TAO needs to be forming higher highs on the weekly chart. That's when I know real money is actually rotating back in. Once all 3 conditions are met, I'm not just buying in one shot. I'm splitting my entry into 3 tranches. The first part goes in the immediately when the conditions confirm. The second tranche goes on the first significant pullback after the breakout. And the last third I keep in reserve for a deeper retest in case we get one. For profit taking, I'll take 40% off at $750, which is slightly above the previous all-time high. The next 35% comes off at $2,100, which we find in hypothesis A, and I'll ride the remaining 25% to $4,200 if the bull case actually plays out. For these trades, I'll be using CoinEx, and I'm telling you this because they're now giving away a $25 bonus to new users. Nearly 10 years in the market, over 1,000 tokens to trade, spot and leverage, a proper crypto exchange, so hit the link in the description and grab your $25 bonus at CoinEx. Here's the bottom line on TAO. The fundamentals are real. The halving happened, institutional money is showing up, the AI narrative isn't going anywhere. But the macro environment is complicated right now, and the chart confirms it. There's no shortcut here. Wait for Bitcoin to lead the way back above the 200-day moving average, wait for the PMI to hold, and then build your position with discipline. Now, let me know your target in the comments below. Are you bullish or bearish on TAO in 2026? If this was useful, hit the like button and subscribe to the channel for more videos like this. Until next time, ciao.